Hi, good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Ajay Sharma in the studios. And what a market it turned out to be yesterday. Just when you thought that you're going to, crack sub the 100 mark, and we did fall, way off, down more than 100 odd points. And then that massive 160 odd point recovery coming in from the session lows, taking us all the way back to that 19,700. Of course, it was contribution thanks to key heavyweights like an L&T and Reliance, which participated in the move yesterday. And good breath as well for the markets. Having said that, you've got expiry as well to deal with. While yes, Reliance notched up its highest gain since August 14th. Who knows whether this is going to be sustainable or not. So it's a bit of a limbo situation, guys, for the markets. Yes, yesterday we did it after 2 days of just nothingness, but don't know whether it's going to continue or not.
Yeah, I don't know whether it's going to continue or not, and that's the big question, right? Because it's expiry as well. There are a lot of factors, right, from crude, what's happening across the globe. So not sure whether this rally is going to be
next week.
Oh, that's an important cue.
MPC as outcome as well. So
but yesterday, one got a sense that traders were running to cover the short position. The data shows that the rebound almost 150 points on the Nifty from the day's low. Almost 350 points on the Bank Nifty was largely because of short covering. So the question is, after the 5 days of weakness and 1 day of short covering, whether today we sustain, because global cues are looking extremely ugly to me. I mean, earlier in the day we were talking about in the edit meet as well, 106.5. I don't remember the last time when we saw dollar index that elevated.
And it's sustained at this level for a while.
It is just trending one way. Yeah. And, up till now, in fact, Morgan Stanley US has put out a note last evening saying that the rise in dollar index and US could actually be very disadvantageous for emerging market equities like India. But up till now, the party continues here because yesterday, broader markets also came back very nicely because of local flows. So FIs, of course, there was a buy figure, a small one. But we are vulnerable, there is no question about it.
Vulnerable, but then there are certain data points that give you the confidence that maybe there is more legs to the rally. So yes, FIs have sold almost 21,000 crore in the month so far. But if you look at the FI positioning just ahead of expiry, it's almost down to 44%. Versus 60% that was there at the start of the series as well. So there's a lot of headroom there as well. So yes, the global data points are not that meaningfully positive, but maybe there is room that at least the downside is limited at this point of time. And the DIIs, they have been doing a lot. They have been pumping in the money, and that really continues. Of course, if you look at the rollover data as well, for now, the Nifty is showing a rollover of almost 61%. For Nifty Bank, it's 57%. For the penultimate day, it's pretty much close to the average because, of course, by the end of expiry, the number is close to somewhere around 85% thereabouts. So we are on track with respect to that. The Nifty returns, of course, have been, if you look at the last 5 months, barring August, which was a very weak month, when we slid almost 2.5%, we're still tracking gains. So even for the month of September, the picture is not too ugly. Versus rest of the globe, the likes of Dow, etc., which are 5-6% of the recent highs that we had seen, the Indian markets have managed to stand tall. Bank Nifty, that's been a weak point, Ajay, and that's something that we should discuss further as well because PSU banks continue to be very volatile. But look at the large cap names, ICICI, HDFC, Kotak, not doing anything at all.
In fact, yesterday, if you see the composition of Bank Nifty, you would see that Kotak ended flat. HDFC Bank recovered from days low, but still in the red. It was the non-large cap focused bank like PNB, IDFC First saw some very good long position, so did RBL Bank. So it appears clearly that it is not just the wider market which is focusing on good quality name beyond the index. Even in the bank index as well, the smaller names are being concentrated at where good gains are coming in.
Absolutely, and especially the non-performance of Kotak Bank all through even the run-up to 20K and beyond. Or for that matter, the listlessness that you've seen from ICICI Bank off late and HDFC Bank, which is now at a 7-month low, by the way. But just to reiterate the global handover as well, while on an index basis, it may not look that ugly, but like we flagged off earlier, investors are now weighing elevated yields onto their positioning. Brent crude is now nearing $100 per barrel, or at least it seems to be in sight. WTI, remember, already has cruised past that $95 per barrel mark. And just to put it into perspective, the dollar index has been now extending itself for a 6th consecutive session. We're now at 106 plus levels already on the yield. That said, it's important to highlight specifically, Ajay, what's happening with crude as well. I mean, are we back to those ugly days?
Yeah, I mean, I remember those. There are, by the way, in the last 10 days, there are two upgrades which have come in on crude, and both of them, I don't remember specifically, but both global agencies are calling for $100 now.
One is Goldman Sachs,
and there's
that
another
is,
one too.
saying 100.
So the
is
voices
there
of
on the
100 are coming back again in
Those
the
old
room
reports are circulating
which we
back.
haven't heard for a very long time. But at least, you know, it has got to do largely with the kind of supply situation. These two, the cartel, I mean, OPEC and the others, the big ones, they have actually tightened the screw on the supplies, and that's why. It's not really world growth has come back and that's why crude is rallying.
Yeah.
That would have been a bit of a, this appears to be temporary. The other day we were talking to Fisher-Aki and he was also mentioning that it could be a seasonal kind of a rally, could near 100 but won't, you know, sustain around that levels.
In fact, let's hear out what Fisher-Aki actually told Ajay when he chatted with him just about a week back. You know, talking about as to how he's not really seeing those escalated levels of $100 to a barrel, and he believes that the range could settle around 85 to 90 odd. But let's hear out his opinion.
On the supply side, OPEC Plus has been very diligent, and they've been holding the supplies back. They want to see the prices in the $85, $95 range, and we are close to $95. It probably is going to stay between 90 to 95, maybe a little bit below 90, but I doubt whether it would hit 100 or not. But on the other hand is the concerns about the financial markets. Worries about recession, worries about the Federal Reserve rate increases. And every time one bank goes bankrupt in the US and Europe, then there is all negative sentiments as far as oil price is concerned. But actually, the fundamentals are pretty sound. I think on the downside, probably will not go below 80 because the OPEC Plus will not allow it by trying to control the market. But there could be downward pressure on the market because the demand fundamentals are not going to be the same next year as this year.
Okay, so that's a view coming in from Fisher-Aki saying that $100 we might hit, but not many indicators right now that whether it could sustain that mark or not. But what's the implication of $97 and why this entire chatter that we're having right now? Because, of course, being an oil importer, India gets hit very hard, and a lot of industries, right from paints, aviations, tires, they're all dependent upon crude as raw material, and their margins get crushed. Not to mention the OMCs, wherein the marketing margins might be under pressure as well. But Somit is joining us to decode all of this in detail for us.
Well, if you see, Brent crude is now trading above the $97 per barrel mark, and this is on the back of two reasons. Firstly, the fact that the US crude stock data fell by around 2.2 million barrels, and this was much ahead of what the street was expecting. Analysts were expecting the crude stocks to fall, US crude stockpiles to fall by around 0.32 million, but the fall is much sharper of around 2.2 million barrels, and that is one of the reasons. And the second reason is the fact that Saudi and Russia have extended their production cut of around 1.3 million barrels per day till the end of this calendar year, and these are the two reasons why crude prices have now surged above the $97 per barrel mark. Now, how will it impact the Indian companies? Firstly, on the oil marketing companies, they will be impacted the most because not only crude prices are rising, but the gross refining margins are also coming down. Now, because of the rise in crude oil prices, the marketing margins of this oil marketing companies get impacted. In fact, on petrol, if you see, the marketing margins have come down to around 1.7 rupees per litre as against 13.7 rupees per litre that they were earning at the end of the June ended quarter. For diesel, the margins have actually turned negative to around 6.1 rupees per litre as against positive 9.1 rupees per litre that the oil marketing companies were earning in the June ended quarter. For oil explorers like ONGC, Oil India, Vedanta and HOEC, the impact is largely expected to be neutral given the fact that government could go ahead and increase the windfall tax, thereby neutralizing their realizations on crude oil. But Ceylon Exploration could benefit because windfall tax is not applicable on that company, hence higher crude prices would mean higher earnings for that company. Apart from that, there are a host of other sectors and companies that get impacted because crude is one of the major raw materials. In fact, 40 to 50% of the total raw material cost is related to crude, like paint, aviation, lubricant manufacturers, tire, cement, and a host of specialty companies like Balaji Amines, Alkyl Amines, Camlin Fine, Deepak Nitrite, Rosari Biotech and many others could get impacted because crude is one of the major raw materials for these companies.
Thanks, Amit, for putting that into perspective. So yes, $97 is what we are staring at, has been at the highest level since November of last year. But where do we go from here on? Let's do a chart check as well. Kunal is there with us in the studio. Kunal, you look at the crude as well as dollar index charts, right? What are they telling you? Because for the last 5 to 6 days, at least, they have been on a clear uptrend.
See, so there are 2 points over here. One is on the short-term charts. The short-term charts are indicating signs of overbought for both crude as well as dollar index, which means that hopefully in the next couple of days we could probably get into a relief correction. Relief I call it because of the impact it has on the equities. So I would probably expect the dollar index as well as crude to get into a mild correction, maybe a couple of dollars for dollar index, maybe at 105 odd levels is where I would expect the dollar index to come back towards, and for crude I would probably expect 93.5, 94 as a strong support for itself. But then the concern for both of these asset classes that these asset classes have given a huge breakout. So it's a YTD breakout for both crude as well as dollar index. The momentum seems to be very strong. So you might have a very short-term knee-jerk reaction into the prices, but I believe that with this kind of a fierceful breakout, if they are unable to come back and retain even their previous swing lows of 94 for crude and 105 for dollar index, then we could be looking at a much more higher targets for these asset classes on the upside. So the view has to be bifurcated with respect to the time frame.
In fact, I think we have Anurag Singh as well joining in on the show right now. Anurag, hi, morning. Can you hear me?
Yes, Aisha, I can hear you.
Okay, very well. Just wondering what this extended move on the dollar index for the last 6 days is indicating. I mean, traditionally it would spell bad news for equities, right? Especially emerging markets.
Yeah, true. So, Aisha, I would say that these are relatively indirect indicators. The more direct indicators out here are the entire bond vigilantism that's undergoing. See, because we heard what Moody's had to say again, that if this time there is a shutdown, they might again review the ratings. U.S. government is issuing $10 billion of bond every day. And at some point, this tough conversation about the entitled reforms, the entitlement expenses, it's broadly about 55 to 60% of what the U.S. government spends. No party is willing to do that. Now, in that scenario, it's unthinkable that the bond market will not get worried, and that's what is being reflected in the bond yields. And if that happens, that ultimately is bad for equity markets, which also means that more money will flow into dollar bonds because they are paying so well, and which ultimately pushes dollar up. So, I understand, for the emerging market, these are the headwinds, but U.S. is not too safe either because, again, there are questions around earnings. Rates are higher to be, going to be higher for a bit longer. Federal Reserve last week, clearly, they revised the dot plots, and this time they're saying there are no cuts, at least till 2024 mid. So, if we kind of put all this together, the picture is that when the rates are 5.5% with another 25 basis probably coming, can the markets be at 20x multiples? And by the way, this whole entire rally was hinging on just 7 stocks. I've repeatedly maintained this and everybody knows this. And that's also kind of coming back to roost. So that's broadly the global setup, Aisha. And it's okay. It's a healthy correction. I think we do need some bit of that. So,
Anurag, what does it really mean for emerging markets like India? Morgan Stanley last evening said that rising yields and dollar index could be very disadvantageous for emerging markets. Here back home in the region, Thailand hiked rates, and now everybody is eyeing, and even your favorite data, the PCE data on Friday. Which way do you think it could tilt?
Yeah. So, Ajay, one is, people are wishing this time that if the government goes in a shutdown, the Federal Reserve might not have any data to look at least in the November meeting. So, but that's on the lighter side. But I think, I think the view has become clear, Ajay, that the market was running ahead with an expectation that, the inflation is cooling down and, it's just kind of, we have kind of achieved that nirvana soft landing, right? That was the whole premise, which I think clearly now this time Fed has really shelved all those plans. They've said that, look, this is no time to cheer, and I would kind of back that up because look, we have come from 0 to 5.5, and there's just kind of marginal impact. Look at core inflation, that's like between 4.2 4.3, right? So it's way too high. More troubling is the wage inflation and the core services, which kind of is very sticky within the 4 handle, right? So with that sense, Ajay, I would, I mean, this is going to stay like this for a while, right? We had pandemic excesses, we overspent, there was pull forward of the demand, companies made a lot of profits. We are settling down now, and I think it's going to bother both the US and emerging markets both, right? So ultimately out here, market is trying to adjust what is the rise, likely earnings. They've hovered between 210 to 240 for S&P. We don't know where they land up for 2023. Same with emerging markets. Ajay, I think markets will have to settle down a bit and reevaluate what is the more normal growth rate, both in terms of economic growth and the earnings. Ajay, that's where I stand.
Okay, Anurag, we'll let you go on that note. Thank you so much for joining us. So yes, a lot of data points that we really have to track to add to that. The worry about the US shutdown, the US GDP data that we'll get post-markets today, apart from the jobless claims data, and the fact now that 80% probability suggesting that there's going to be another rate hike in the month of November. All of this is something that the market will have to price in, because as our experts are talking about, it's not fully priced in at the moment in that. Let's quickly go across to our technical guests as well to get a sense as to where our markets are headed. Nooresh Merani is also joining us. Nooresh, you go first. What's your view on the market? It's of course day of expiry. A lot of volatility is expected in the last half an hour. We'll get those Nifty rebalancing flows as well. What's your own expectation as to where we'll end this month?
So yesterday was a good recovery on the Nifty index from the lows. And yesterday night, we saw a good recovery in the US markets as well. So this could create a short-term bounce towards this 20,000 mark going forward. And one would keep a stop loss below 19,600. So a 150 pointer stop loss for a 300 pointer target. So overall, the bias is positive for the day and also for the next few sessions. So overall, expecting a buy on dips going forward. Same is the case with Bank Nifty, a decent recovery. And a lot of heavyweights have not seen a follow-up selling. So HDFC Bank, ICICI, Kotak have not seen follow-up selling. Yesterday was a decent recovery in all of them. So expecting some bit of a bounce for the next few sessions.
Right. Kunal, the two stocks that lifted us up yesterday, right? Reliance as well as ITC. Or L&T as well as ITC actually, but let's pick up on L&T and RIL. Do you see further follow-through?
Well, I would expect further follow-through for these stocks, and in fact, I would probably expect even the other few large cap names like HDFC Bank, ITC, etc. Even these stocks could make a good comeback for themselves on a very gradual basis. So the momentum seems to be coming back into few of the larger cap names, but I believe hopefully with the start of the fresh expiry, we could probably be expecting this momentum to trickle into the other large cap stocks.
Mm-hmm. Nooresh, you also track the small cap, mid cap indices very closely. Yesterday's rebound actually it was more pronounced in the broader markets. How do you see that?
So we did not actually see much of a correction in the mid cap indices yesterday when we saw a 100-point cut on the Nifty, and when the Nifty recovered, we saw a decent enough recovery in the mid cap and the small cap indices. So there has been a relative outperformance in the last 3 days where the Nifty has corrected, but the mid cap and the small cap indices did not make new lows. So the bias has been positive on the broader markets for the same reason. There is a lot of relative strength. We just saw that 1-day correction 10 days back, and post that we've not seen any follow-up selling in a major way. So stock specific action remains good on the broader markets. It's just that the momentum has reduced compared to what it was for the last few months. At the same time, if you look at Nifty, it is again a problem of the few heavyweights which have drifted lower. Apart from those, even there is a sideways move in a lot of other Nifty names. So if you pick up an Axis Bank, it still quotes around 1,000, stays above those levels. Smaller mid-cap banks are hitting new 52-week highs. So the bias remains positive across the board. It's just that the momentum has reduced.
Sure. In fact, let's discuss that bias, which is positive, especially in the small cap and the broader names. So, which are those names that come to mind, Nooresh?
So for the day, I'll start off with large caps. The two names would be first would be a buy on ONGC, just a couple of points away from a new 52-week high. The trend looks positive. It's been a slow and steady move after the breakout of a 175, 180. The stock was last at 190 when crude hit a high of $130 in the Russia-Ukraine crisis. And the stock has finally come back to those levels. So this could be a breakout stock going forward. A stop loss at 184, target price of 220. Second is the buy on Axis Bank, which has clearly shown relative strength in the whole banking space. The previous high for the stock was around 1,010, made a move above that, but continues to hold above the previous highs, makes the fastest recovery. So expecting this to break out, a short-term target price of 1,100, stop loss at 90.
What stocks are you picking out?
So I'll go with the buy on BHEL. The stock looks to be attractive in terms of the risk reward at 124.25 levels. Would look out for a stronger target of 150, stop loss to be kept at 118. And Granules is the other stock which I've been bullish on earlier. Given a swing breakout yesterday, closed almost at the 350 mark. So would expect another few percentage points on the upside on an intraday basis, 360 as target. Stop loss at 342.
Okay, let's discuss some of the other stocks and movements in the market which are going to be in focus. And Samit is here to highlight that. Remember, we were just talking about the Nifty rebalancing. The flows adjustment, of course, is going to kick in the last half an hour of trade today. But what's likely to happen, Samit?
Well, it is actually more important because today is also the expiry day, and given the fact that volumes in these counters that I'll be just mentioning could be on the very higher side and could react in fact positively as well. Firstly, HDFC Bank is one stock that we need to keep an eye out for because flows of around 760 odd crore is what is expected because the weightage of HDFC Bank has increased in Nifty and Nifty Bank. Now 760 crore for HDFC Bank might not be a big amount, but given that the stock has been languishing, this flows could actually push the stock to a positive territory. Apart from that, in the Nifty Next 50, there is Shriram Finance, which is expected to see an inflow of around 523 crore rupees, which is nearly 2 times its 20-day average volume. For Trent, 465 crore of inflows are expected, which is nearly 4 times its 20-day average volume. Apart from that, there is TVS Motor and Zydus Life, which could see an inflow of close to 160 to 365 odd crore rupees, which is more than 2 times their 20-day average volume. On the negative side, it's Page Industries, which would see an outflow of close to 270 rupees crore, which is nearly 2.6 times its 20-day average volume. And one stock from the PSU basket that we need to keep an eye out for is Power Grid, which would see an inflow of close to 530 crore rupees, which is close to 1.7 times its 20-day average volume. So strong flows are expected in these stocks in trade today in the last half an hour, most likely.
Interesting. We'll watch out for all of that. For Power Grid, I think some of those bonus issues are also getting listed there, the bonus shares that is. So liquidity will be impacted on account of that as well. But Samit, what about L&T? UBS has upgraded the target price, and I'm guessing this would be one of the highest on the street. The stock right now is sub 3,000, and they're talking about 3,600 levels.
Well, yes, it is the highest target price that UBS has given. The previous highest target price was around 3,300, and now UBS has come out with this new target price of 3,600. Their earlier target price was close to 3,040. Now, what the brokerage is saying is that the past strategies of L&T management has aided their capability and scale, and the new strategies now focus more on asset-light model, a sharper focus on cash flows, willingness to reward shareholders much more, and they have also aligned their businesses in a better way, which could focus more on growth going forward. Now, the brokerage believes that the current growth momentum is sustainable, and they're saying that the domestic infra continues to remain healthy, and they're seeing potential upside when it comes to the FY24 order guidance number that L&T had given. And if that happens, this could be one of the key triggers for L&T. Now, they're expecting the bulk of government order themes, reforms and policy initiatives to continue and gain momentum, and they're saying that if there is any weakness in the stock, that could be a buying opportunity for L&T. And over longer term, that is for FY23 to FY26, they're expecting L&T's EPS to grow at a CAGR of nearly 32%. So these are the positives that UBS is talking about.
Okay, after
That's
that 2%.
a large cap. That's a large cap, 32% earnings CAGR.
Yeah.
Wow, that's amazing.
Very few companies actually give a 30% earnings.
Yeah, that's what I was thinking. No wonder the stock is sitting at its lifetime highs right now.
Okay, Samit, thanks for flagging off all that we need to keep on our radar today. Let's take a very quick break on that note. The Gift Nifty once again is indicating a very, very quiet start. Let's see how the rest of the day pans out.
Okay, a lot of stocks aren't going to be in focus today as well on account of news flow. One such stock is MCX. Finally, it's confirmed, that is something that we have been telling you, that in the month of October, the new software might go live. And now we understand that October 3rd is the designated date when that will happen. If you pull up the last 7-day chart of MCX, you'll see that the stock has already recovered quite a bit. But there's a lot of fundamental, a reason for that, because this old software was causing a hit almost of 150 crores to the PNL every quarter, and that really goes away, and that is the reason you have seen this massive rally on the stock. But Kunal, do you believe there are more legs to this rally? What are the levels you're watching out for when it comes to MCX?
Yeah, definitely. I am extremely bullish on the stock, and I think the kind of breakout which you've seen for MCX, and it's not just the last 3-4 days of breakout, but the breakout I think a couple of months back when the stock managed to scale from 1700, 1750 mark towards 1900 levels first, and then a mild correction, and then a pickup of price action the last couple of days. That's indicative of a bullish flag pattern on the charts for MCX. It's still, I think off from its 52-week or lifetime highs. 2150 approximately is the high for MCX, but the charts are very, very encouraging. So I would be, quite keen to, recommending the buy on MCX. My expectation is that at least 2000 over the near term could be achieved, and beyond that, we could be looking at a new high for the stock.
That's about MCX, but in yesterday's trade, you saw a lot of wires and cable companies do very well in trade, and one such stock was Polycab, which was gaining almost 5% in trade today, in yesterday's trade, sorry. And management has actually given some indications on the roadmap to Nuvama, and Harsh is here with the details of that. Harsh, what exactly is Nuvama telling about Polycab's roadmap from here?
Well, bullish on Polycab, and on the back of that analyst meet that they've had, what they are suggesting or what their key takeaways are is that exports is really emerging as a key opportunity for growth going forward for Polycab, and they aim to replicate their distributor-led template even in overseas markets. Of course, have to wait and watch how that actually plays out. What they're also suggesting is that the company has renewed its brand identity with regard to logo, campaigns, etc. And all of those shall start paying off over a period of time. And of course, it will strengthen the brand over the longer term. So those are possibly drivers going forward as well. With regard to domestic cables and wires demand, it continues to remain robust. In fact, Nuvama is building in a 20% growth in Q2 with regard to its top line as well. So largely bullish on Polycab. Cables and wires continues to be a space in focus.
Harsh, while we have you with us, tell us what Macquarie has to say about EMS stocks as well. Okay, we'll get to Harsh in just a bit from now. In the meantime, let me take it across to Vamakshi and find out how the August housing sales demand have been so far. Vamakshi?
Well, yes, housing sales seem to have sustained their very strong run. In fact, in the month of August, in India's top 7 cities, the demand for houses rose by almost 28% on a year-on-year basis and nearly 8% on a month-on-month basis. Now, out of the top 7 cities, Bengaluru was the best performer in terms of demand. Demand rose by almost 53% on a month-on-month basis. Not just that, we also saw the launch momentum see an improvement. It was up nearly 2% on a year-on-year as well as month-on-month basis. Again, out here, Bengaluru saw a very sharp increase in new launches, up nearly 46% on a year-on-year basis. In fact, when we talk about the launches, they zoomed nearly 138% in the NCR region, and this was followed by Chennai, Bengaluru, Pune as well as Hyderabad. But important to note that the launch momentum actually slowed down and in fact dropped in cities like Mumbai as well as Kolkata. Not just that, when we talk about the inventory levels, now definitely there was an improvement seen in demand as well as launches, but demand outstripped the supply, and that is the reason why we saw a nearly 4% dip in the inventory levels in the month of August. In fact, inventory pan-India improved to just 17 months in August 23 as compared to 22 months in August 22. Not just that, when we talk about the pricing, prices on average were up in most major cities, surging as high as almost 28% in the NCR region. Now, let's also look at what Nuvama is saying. They believe that the sales momentum is expected to improve, especially for organized developers, they believe that realty stocks are quite attractive from the medium-term perspective, given the increased consolidation as well as the improving cash flows. So given those factors, some of its top picks are DLF as well as Brigade. But all in all, on the back of this data on housing sales as well as launches, keep an eye out on all of these real estate counters.
Well, yes, and real estate sector has been one of the best performing ones. A lot of tailwinds to that. Of course, getting out of that decade-long slumber as well. But the other space which is heating up and heating up quite a bit is the electronic manufacturing space. A lot of positive policy action there as well. But what could be the implications? And despite the valuations run up, are these stocks still a buy in the view of Macquarie? Let's go back to Harsh to understand that. Harsh.
Well, yes, let me start off with Keynes first off. The management expects the share of exports to be sustained in the mid to long term at around the 25 to 30% band versus the 15% in FY23. They're also focusing on non-consumer industries as well as low volume and high margin industry as well as products. That's where the current focus is. They're guiding for a $200 million FY24 revenue and targeting $1 billion in revenue by FY28. That's a 5x over the next 5 odd years. And they are expecting to sustain low teen percentage margins as well. Let's quickly move on to Sirma SGS. Again, Macquarie believes that the focus on a design-led approach to contract manufacturing should help in increased revenue both and as well as margins, as well as add to the wallet share as well. In the medium term, the management expects nearly 1/3 of revenues from exports, and they are expecting margins in that 9 to 11% band for Sirma SGS. Also, with regard to PG Electroplast, very quickly, focus is on new product launches, customer wins, and cost optimization. And FY24 guidance, as per Macquarie, stands at revenue at around 2,800 crore, implying a 30% growth with a 3.5 to 4% PAT margin.
All right, so those were some of the views coming in as far as EMS space is concerned. But if you look at yesterday's market composition, IT was one of the areas which got the index back, and even in the mid-cap IT names were gaining. Where exactly should you be betting on if you want to play this IT rebound? Sanjeev Bhasin told us earlier.
I think the opportunity lay 3 months back when you could get HCL Tech closer to 1100 or top. Maybe we picked it up at 950 or a Tech Mahindra closer to 1050. We are overweight Tech Mahindra and HCL Tech. Persistent has been our star player in the whole basket, but we remain focused on these 3 stocks. You can add a Coforge because now there is no promoter, and sooner rather than later you could hear some corporate development. But yes, it has a proxy of a tailwind of a weak rupee, and I think that most of the headwinds regarding bonds and others are getting slowly priced in. You cannot have bond yields at this rate and stocks where they are. So the markets are actually pricing in that the Fed will turn bear, dovish faster than you thought. And I think the bark is always worse than the bite. So yes, we are overweight HCL Tech, Tech Mahindra, and Persistent. We've added Coforge in this decline.
Okay, let's take it across to Hemang Jani and find out what to do with the market and how is it that you should be positioning your portfolios. Hemang, hi, morning. The big talking point this morning is, of course, the dollar index, which has been steady above the 106 mark for almost 6 days now, and crude, which is almost nearing 100. Does it seem like we could see a dip down further in our markets?
Yeah, good morning, Aisha. Yes, I think the fact of the matter is that the macros have turned for the worse, be it crude, be it dollar index, be it the way things are happening in terms of interest rates in US markets. And while the earnings trajectory for our own markets and companies is not that bad, the fact is that the markets have run up. If you look at from March till now, index, mid caps, broader market. So I think it doesn't really give you that comfort to do a fresh entry, and one really want to create a little bit of liquidity or take some profit off the table. At the same time, when you see a little bit of volatility over the next few days and weeks, it would be sensible to kind of have some understanding of what kind of numbers are we going to see, and wherever the earnings picture is looking good, and if you see the stock, let's say correcting by 3-5%, somewhere there, it would provide a great entry point as well.
Himang, talking of earnings, we were just discussing earning probability of L&T from here on, and an influential brokerage this morning says over 30% kind of earning visibility in L&T and a new target price at 3,600. It is also emerging as a crude rebound or energy play as far as the Middle Eastern region is concerned, because 1/3 of their overall business is now overseas. How do you see L&T at this price?
Ajay, one aspect of L&T is the kind of capex cycle that we are seeing, and the kind of order book and the possible growth in earnings that one can really expect, particularly out of ENC and to some extent from hydrocarbon and defense portfolio also, which L&T has. The other part, which is even more interesting, is that in the recent open offer or buyback, retail component got subscribed by almost 100%, which means that the floating stock has actually reduced. So I think this is technically a very positive setup for a stock like L&T, and we do think that while the valuations are not exactly cheap, given the positioning of L&T and the less floating stock, it makes sense to really have some allocation towards it for, let's say, about 12 months or so. I think there's a case for a 20-25% kind of an uptick over there.
So that's about L&T, but sticking with infrastructure, JSW Infrastructure, that stock IPO got the subscription as much as 37 times, and off late we have been seeing a lot of primary market action as well. Yatra is going to get listed today. Hemang, have you been looking at any of these fresh IPOs?
Like good opportunity, while the overall subscription is on a higher side. The fact of the matter is that the space in which it is operating in is something that people really want to participate in. The group has a very good pedigree. Valuations are not exactly cheap, but I think in the current scenario, people would be comfortable with it. So I think this is one IPO that one should definitely go for it. But one will have to take a very stock specific view. Yatra is something that I think when you compare the valuations with some of the peers, it's far more, like more than 30-40% higher. It doesn't really make sense to go for it. So one will have to really take a stock specific view as far as IPO market is concerned.
Sure.
Okay.
Sure, very stock specific view. And the other one, Hemang, that we have been talking about is this entire manufacturing theme. Dixon too has announced a major announcement that with Xiaomi they are going to manufacture some of the smartphones as well. Do you think the valuations make it very, very punchy and difficult to buy? Or given the growth prospect is so humongous, it is fair to trade at such premium?
I think this entire, the laptop part is not playing out as per the plan, because there is a relaxation that the government has announced. But overall, when we look at the additional capacity which is being built up, also the recent tie-up that it has done, clearly the case is that there is going to be upgrade in the earnings for a name like Dixon, and people really want to participate there. So if you see a small correction, let's say about 3 to 5%, that would be a great entry point for Dixon, because the overall earnings growth picture is looking much better now.
MCX, we just flagged off that stock as well. It's been on a run up the last fortnight or so, ever since the buzz only got stronger that they're going to go live on their new tech platform. And now it's official. It's October 3rd, which has been the chosen date. Hemang, just wanted to understand about how you would approach MCX. It's run up a fair bit already, but do you think one can still buy because the story is just going to begin?
Yes, so it's a landmark thing for MCX. We've seen how delayed this entire migration has been, and the kind of money that they had to shell out when they had to extend this contract at 63 Moon. So I think definitely it's a very big positive. Simultaneously, when you look at the commodities volumes on a month-on-month basis, they are growing by 24-25%. We're seeing the kind of surge which is happening in crude oil, while some other commodities may have turned volatile. So I think if one is really looking at a 1 or 2 year kind of a play, then in India we don't have too many options, right? You have an MCX and a BSE. So I think people would not mind paying a slightly higher valuation for a franchise like MCX.
BSE has run up quite a lot. In fact, when we interviewed the new management in June somewhere, The stock has already almost doubled since then. But Himang, I want to talk to you about these wire and cable stocks. This morning, Nuvama has put out a note saying that Polycab could actually be a play on exports now. Right now, they just have about 12% of their revenues from exports. And you would remember when they IPO'd, they had annual profit of almost 500 crore. Right now, they have a quarterly profit of 500 crore. So, the company has grown a lot. But how much potential do you think they can unlock from exports?
So I think this wire and cable segment has displayed very strong growth over the last 2, 3 years, and given the kind of surge that we are seeing in the residential, commercial real estate activity, and the kind of renovations that people are undertaking, there is going to be a significant growth for sure. I had seen one tweet saying that you don't replace your cables and wires at home, so why should these companies get such a crazy kind of valuation? But I think what we must understand is that the upgrades through various means, renovations and the new sales which is happening, there is going to be a significant uptick, particularly for the better upgraded higher capacity wires and cables. So I think both for Polytech as well as RR Kabel, the growth trajectory is good. Yes, valuations we can debate, but wherever there are certain niche companies operating in a particular space where the earnings visibility is 20-25%, people do not mind paying high valuations. So I think one should have a positive bias for these names.
Okay, a positive bias for these names, but yesterday the stock which was not seeing any positive bias was Vedanta. That was down almost 6-7%. Of course, Moody's had downgraded their ratings, and that's the reason we were seeing that slip. But this morning, there's additional news flow talking about how the company might be looking at demerging their businesses and service the debt better. Himang, do you have a view on Vedanta?
I think short term, because of this Moody's downgrade and the fact that we also had some news about some delay in the interest payments, that will not go down well. But when you look at the company holistically, given the different businesses across commodity segments, it is looking quite interesting in terms of valuations. Demerger, I haven't really looked at the details as to how much unlocking it can bring to the table. But I think any significant correction from here on would provide a great entry point because it's a great dividend yield play also.
Anisha, if you look at the history of this company in the last 5-7 years, they must have attempted these kind of demerger, restructuring,
many times,
delisting, this, that. So kind of appears that they, I don't know how many tricks they have up the sleeve, but it is kind of failing to excite the market a whole lot. So let's see how this one actually goes out. But yes, deep value, yes, and a full commodity rebound play as well. So that one can't really rule out.
Okay, some of the other names, and we've been talking about as to how Brent has climbed up above 97. So what's it going to do to OMCs? Surely damaging, as has been the case in yesterday's trading session as well. Kunal, opportunity to short HP and IOC further?
Yeah, I think so. And I think, in fact, in the last couple of days also when we were discussing, I mentioned that there's a definite amount of weakness in the charts for these OMCs, even though these stocks are forming a triangular pattern on the hourly charts. But then, the bias on the indicators is still negative for these stocks. We saw a mild pickup of price action for these names, I think, in the start of this month, where IOC, for example, moved from 87.5, 88 levels to 94, 94.5 odd mark. But then the stock failed to surpass about the previous swing highs at that point of time, and is now on the verge of making its fresh swing low. Same is the case with the likes of HPCL and BPCL. So I think there could be a decent trade over here emerging to try and short these stocks at least another couple of percentage points on the downside.
All right, let's also get you some more views coming in from automobile stocks, Varun Saboo and a few others.
What I'm gathering is that there is a big surge in terms of what people are wanting in terms of premiumization. I met the two-wheeler players, met the four-wheeler players. Everyone has a view that people want to buy this premium and the super premium vehicles, and also in that they want to buy the topmost category. So my biggest bet right now is two-wheelers, very positive on all three, Bajaj Auto, TVS, and Hero MotoCorp. So these three are the top ideas there, which I would like. Apart from this, I think there there is also a clear trend in terms of CVs, that CVs are also doing well. And the trend is continuing. They are in an up cycle, which is going on. So autos, particularly overall as a pack, four-wheelers, two-wheelers, four-wheelers and CVs looks fine to me.
Okay, let's pick up on Reliance Industries. While yesterday definitely it saved the day for the recovery in the markets, but you've got Jio subscriber additions as well for the month gone by, and they've added about 39.10 lakh users in the month of July versus 22.70 lakhs. So that's a significant jump up that they have seen month on month. On the other hand, Vodafone Idea continues to bleed in terms of subscriber deletions. They've lost now 13.20 lakh users in July versus a loss of 12.90. So on a consecutive basis, Vodafone Idea is only losing out its market share or subscriber base to the likes of Jio or for that matter, Bharti as well. But among separately, aside of Jio, for the conglomerate, you think there are enough triggers in place for Reliance to climb up higher and not just stay put at yesterday's rebound?
Yeah, so basically the stock has underperformed big time ever since this demerger and the listing of Geo Financials happened. So I think when you look at the overall business, including the Geo part, it is surely looking quite attractive in terms of valuations. The higher crude oil price would also have some rub-off on, on the refining component of the business. And even on petchem, we are seeing the margin stability coming through. So I think from a investment perspective and valuation perspective, that is surely looking quite attractive because you have additional triggers in terms of the unlocking of the value of this Geo Financial, which is not reflected in the current price. So I think it is looking quite interesting at this point of time.
Nooresh, comment on the charts of REC and PFC, and I would request my producers to fire the YTD chart of both the counters because they have seen a meteoric rise this year, up anywhere between 100 to 150 percent surge that we have seen. Nooresh, do you think this kind of momentum is further likely to continue, and if yes, what are the levels?
So the case here is the way the stock bounces back after every dip has been surprising. So the last time we saw a dip from, say on an adjusted basis, PFC corrected from 249, 250 levels down to 220, 25 and made a slow and steady recovery over the next 10 sessions. And now we've hit a new 52-week high. So with the new 52-week high, the momentum is strong, but it is a little stretched on the short-term basis. The stock was 130 back in May and we are today at 250. So the case here is the only way you can trade this was a very strict stop loss or a trailing stop loss. So in this case now the stop loss becomes 235. Same way for REC, a fresh 52-week high yesterday. The stop loss now shifts to 270. So momentum begets momentum in such cases. So until the time we don't see a price action shifting, you continue to ride. So out here would keep a strict stop loss at yesterday's low and still expect some more 5-8% even from here.
Of course, the other tailwinds, of course, is the fact that they're working towards net NPA, dividend yield of over 4%, the book value is still just around 1.28 times, and we'll discuss all of that with the management as well, who joins us at around 9:40. So stay tuned for that conversation because we will be discussing their roadmap as to how they are planning to achieve the AUM guidance that they had given earlier, plus what's lined up in the power sector as well, which has been getting a lot of interest. So wait by for that management interaction later in the day as well. But what else is happening in the markets? Well, a lot is happening when it comes to the gaming industry as well. Of course, Delta Corp has been hitting lower circuit, has been caught in a bit of a whirlwind on the downside on account of those tax changes. But for Nazara, there seems to be a breather which has come in. Yes, there is a tax notice that they have got, but the tax notice is just limited to around 3 crores thereabouts. Hemang, would you want to bet on names like Nazara or any other digital play that we have, the likes of Affle, etc.?
I think this entire controversy or development has come as a major blow. And in many cases, the amount involved is far too large, and that would really put a question mark on the sustainability of the businesses itself. So we feel that this entire matter and the legal, thing is going to continue for an extended period of time. Whether it's going to be a gross amount that the person has betted on, or the final, amount, win or loss, as the case may be. So, for somebody who is taking a very, has a high risk appetite, I think having seen such a major blow, there can be some opportunity, maybe a 2, 3, 4% kind of an allocation can be made to the names like Delta Corp or Nazara, where the tax amount is hardly about 3, 3.5 crore. But yeah, in terms of the sentiment, in terms of the legal battle, I think this is going to be a space where people really would want to stay away from, particularly those who are, looking to play a little stable earnings visibility kind of a model. They would not want to get it.
Okay, that's the take coming in on Nazara Technology. Since we're talking about tax demands, there's a tax notice as well on ICICI Lombard from the DGGST for a tax demand worth about 1,729 crore rupees. And purely because the quantum is that high, maybe you could see a sharp negative reaction on the stock when it opens for trade today. That said, let's just throw a highlight on what's happening within the real estate pack as well, because not just real estate and autos have been some of the best performers in the last 1 month or so, but Oberoi Realty, that's going to be another stock to look out for. It seems that they're in a development agreement for another 13,450 square kilometer of land in Tardeo in South Mumbai, which is indeed prime property. So just look out for what this stock as well does in trade. Kunal, any of the interesting realty charts that are propping up?
Well, DLF still seems to be one of the better names over there. That stock has done reasonably well. It's managed to surpass the last, I think, 7 or 8 years of high of 500 plus levels. Anantraj is something which I've been bullish on. The stock is almost at 210, 215 odd mark. Again, a very steady kind of a chart, and interestingly, the stock has been a lot more consistent and less volatile as compared to the absolute nature of these real estate names. Oberoi Realty is also emerging as a breakout candidate. The stock has shown signs of a very good recovery. I think at 1130 odd mark, the stock is marginally off from its previous 52-week highs, 1200 approximately. So hopefully we could probably expect Oberoi Realty to also scale past about those levels. But the underperformer over here compared to the 2021 highs is actually Godrej Properties. That stock is off significantly from its lifetime high levels, which means that probably the stock may take a lot of time to try and cover up the underperformance and come back at par with respect to the other stocks in the real estate pack.
Himang, we are also entering, in fact, we have entered the festive season with Ganesh Chaturthi, Raksha Bandhan, etc. And this is usually the time when consumer durable companies have a very good sales, the next 2 quarters. Do you like any of the names out there? You would like to play them?
I think festive season, you would have some, kind of a correlation with the auto names, because a large part of the sales, almost about 30, 40%, they clock during festive season. So surely some of the passenger vehicle like Mahindra, Maruti, some of the two-wheelers, those are the ones where people would really want to focus upon. When it comes to consumer durables, the trend is a little mixed. You've seen certain categories doing well, but it's not a broad-based kind of play. So we do like Havells and to some extent Crompton, where Crompton has been a valuation play, and there's a catch-up vis-a-vis some of the other names which have really popped up very well. But I think one will really have to take a stock specific. More importantly, given the high expectations people have from the festive season, we need to see initial numbers come through so that the conviction over there is high. But yes, Havells is something that would surely be positive on.
So that was about Havells. I also want to put the spotlight on the IT sector. Of course, today later we'll get the number from Accenture. Remember, this is going to be the 4th quarter earnings for them, but additionally they'll come out with the FY24 guidance, and that will be the key as to how the next few months, etc., are likely to pan out. They would be talking about how client spends are actually shaping up, what kind of weakness are they seeing when it comes to the consulting business, offshoring, what the trends are, because for now the street is penciling in that there could be a guidance of 3 to 6% constant currency growth in the coming year. and what happens to the headcount as well, because last quarter they had shaved off almost 19,000 jobs, and that was a precursor to the kind of weakness in demand that they were witnessing. But what happens from here on, and what they talk about the generative AI opportunity as well, will be very crucial, because just come next week, we'll start getting earnings from the likes of TCS, HCL, etc., which will begin from 11th of October itself. Hemang, ahead of the earnings season, is there any trade or any position that one should build up on the IT sector?
IT, I think large part of the pay is behind, and when you look at the Nasdaq, which is actually going through a bit of a correction, almost about 5 to 6% kind of a correction is already over. So depending upon how the some of the IT companies deliver the numbers or give the guidance, that would have a major bearing on the Indian IT companies also. But our interactions with TCS and some of the large companies is suggesting that the order inflow continues to remain by and large intact, no real big surprises. And if you see, TCS in particular has remained quite resilient over the last, let's say, few weeks. So I think surely, not only just from a result perspective, but purely from a valuation and the fact that there's going to be a rebound in the IT spend over the next, let's say, 1 or 2 quarters. I think TCS, HCL Tech, they both are looking quite attractive at current prices and valuations.
Actually, yesterday there was a very interesting note from Morgan Stanley as well, wherein they downgraded Tech Mahindra. And if you pull up the YTD chart, that stock has seen a massive rally, and the earnings so far haven't been supportive at all. The margins had, dropped to the level of 14. There was no visibility with respect to kind of growth as well, and of course the transition at the top, which people are banking on. But the proof of the pudding would actually be in the execution as well, right? Kunal, on the charts of Tech Mahindra, would you suggest, recommend booking some profits now?
In fact, I would still believe that there should be more upside left for Tech Mahindra, because it's been a very stable chart in the last 3-4 months. From the March lows of I think 1100 or 1060 for Tech Mahindra, the stock has gone through a very stable uptrend. It first managed to break past about the 6-month or 9-month highs for itself. I think that was around 1160, 1140 mark for Tech Mahindra. And from there, the pace has not intensified, but it's been a bit more steady. So which means, when stocks, they generally get into a breakout in a very steady kind of a manner, even if they get into any kind of reversals or short-term corrections, those corrections also tend to be more short-lived, as well as the intensity of the corrections are also quite, mellowed. So I would probably expect Tech Mahindra to behave in that fashion. So would expect that in case of the stock dips down towards say 1250 mark, that could be a very good level to buy the stock, aiming for targets on the upside to 1350 to 1400 plus.
Okay, the other stock to look out for, of course, is going to be L&T. And Hemang, an interesting note coming in from UBS. They maintain their buy, and they've got one of the most bullish price targets on the street at 3,600 rupees per share. And they're saying that they're going to record a very healthy 17 to 32% CAGR in the duration of FY23 to 26. You think that's a possibility?
Yeah, I think, given the overall, positioning in terms of the current, portfolio of businesses that they have, ENC, the traction continues. You are seeing a good revenue growth visibility when it comes to hydrocarbon and defense part. And also, as I mentioned earlier, once the open offer is over, when 100% of the retail participation is done, which means that the floating stock has reduced even further. So I think both from a technical float point of view and the earnings point of view, things are looking good. And valuation, yes, it's on a higher side, but I think wherever you see the delivery of earnings, we would not mind, buying that stock. So I think from a medium to long term perspective, L&T would remain one of the top, picks that one can think of.
Talking of engineering, there's a PSU engineering stock which has gained very smartly in the last 1 month, NBCC. If you pull up the last 1 month chart, you would see almost 15% gains coming over there. Nooresh, can you do a chart check for us in NBCC? It's a 11,000 crore MCAP company, and they are getting proceeds of almost 5,500 crores, almost 6,000, half the MCAP via a parcel sale. So it could excite the stock today. But what are the charts telling you?
So NBCC is looking pretty interesting on the longer term charts. It covered it at 45 when it gave a breakout. And now it gets interesting because the 2021 highs was closer to this 60-65 mark. And then you go back to 2019 highs, it was around 65 mark. So 60-65 is the barrier for the last 3-4 years. Once it crosses, it opens up a much bigger move. And mind you, the stock used to be 140 rupees in the last cycle in 2017. So it saw a very sharp correction from 140 to 20. And then it recovered to 60-65, went back to 30 levels, and now has started a rally. The move in 45 to 60, the volumes have been pretty high. So indicates a long-term turnaround is in play, and actually sustaining 60-65 levels opens up a move all the way to 90 as well.
Okay, so that's the take coming in on NBCC. Definitely watch out for that counter in the trading session. The pre-open rates must have trickled in. Let's see what they're suggesting. For now, at least it's going to be a start in the green. That's what the rates are suggesting. A good bump up as far as the Nifty is concerned as well, and Sensex suggesting a 500-point up move. Let's see where they settle, because right now this is just the very initial rates that have come in. But let's take the mid-cap ideas from our chartists in the meantime. Kunal, your mid-cap bets?
I'll go with Hindustan Copper as the mid-cap name. The stock looking quite charged up. I think it's making a comeback of sorts after a correction of more than 10% the stock had seen in the last 2 weeks. So I think closer to 160 odd mark would be keen to recommending a buy. Expecting the stock to climb back towards 175 mark. Stop loss for this trade 152.
Right, Nooresh, what about your strategies?
So that would be a buy on Angel One. The stock is back to the highs of 2022, wherein it topped out closer to 2000 levels, went all the way down to 1000, made a recovery, has seen a lot of volatile moves in July, August as well, 1800 to 1450. Now for the last almost 3 weeks, the stock was consolidating between 1750 to 1950. Yesterday gave a price volume breakout. Would expect a move towards 2150 in the short term, stop loss at 1850.
Okay, we'll let Hemang go on that note. Hemang, thanks as always for joining in this morning. By the way, the pre-open rates are indicating quite a smart start actually, a 0.5% uptick in continuation of that 160-point recovery that you saw from the session lows. That is definitely not all that bad given the global context that we're in. It's indicative of a over 100-point move. Let's see what's contributing to this move. Is it ITC? Is it Reliance? Is it L&T? The movers from yesterday, they will just come up for you on your screens. Next, in the pre-open rates, ITC is just marginally higher actually. More pertinent to bring up L&T as well as Reliance because of their weightage. Yeah, there you go. Reliance is holding up 1%, and that's clearly rubbing off on the index, and L&T almost touching the 3,000 per share mark now as we speak. But let's tell you what else is happening outside the world of equity markets. And Pentagon has awarded Elon Musk's SpaceX its first contract for Starshield network for a year at the value of $70 million. Now remember, the award comes alongside 18 other companies through a program run by the Space Force's Commercial Satellite Communications Office. An automaker Hyundai and Kia are recalling a combined 3.37 million vehicles in the United States because of a risk of engine fires. Remember, a few months ago, automakers had warned the owners to park their cars outside and away from structures until repairs are completed. And now, once again, the warning has been flagged off.
Talking about our own city, devotees bid farewell to their favorite god, Lord Ganesha, today as they take a promise from him to return next year. Huge processions are expected on city roads with Visarjan celebrations adorning the streets along with traditional performances. Meantime, after a brilliant run at the Asian Games 2023 on Wednesday with 8 medals across disciplines, men's 10-meter air pistol team bagged the gold, while Wushu star Roshabina Devi won a silver medal in the women's 60 kg final as well.
Right ahead of the market opening, let's also get you some juicy gossip from dealing rooms. My colleague Somit is here to talk about one stock which is being discussed there. Somit?
Well, Puravankara is a stock that has been in focus in the dealing rooms. What we are understanding is from our dealer checks is that mutual funds have started buying into this counter. Now, yesterday we had seen a sharp 7% up move in the share prices in the last 45 minutes, and mutual funds have actually started to accumulate this counter is what we are understanding now. Despite the sharp run up of 7% that we saw yesterday, dealers are suggesting there could be more upside when it comes to Puravankara going forward. There are multiple triggers also for Puravankara. Firstly, that the government is considering a subsidy for affordable housing scheme. Apart from that, dealers are also suggesting that there could be a big Bangalore project announcement that could come in for Puravankara. So these are broadly the major triggers. Now, affordable housing contributes nearly 9 to 10% to the total sales of the company, and Bangalore is one of the key areas of operation for Puravankara. So keep an eye out for this stock in trade.
Well, yes, we'll watch out for Puravankara as well as the rest of the real estate pack. Thank you, Somit, for joining us. In the meantime, in the pre-open, one stock which is doing quite well for itself is Endurance Tech. Remember, they are looking at expanding their capacity for the aluminium alloy wheels as well. And that's the reason the street is excited about that one. So holding out with some gains. NBCC, as we flagged off earlier, 5,700 odd crores is what they're getting for sale of a commercial property. Medanta, there is an initiation that has happened from Motilal Oswal. Quite positive about the prospects as well, and that's visible in the stock price, which is holding up in the green. MCX, not that much. So after that run up that we have seen over the last couple of weeks, starting in the green, but not a runaway rally is what we are witnessing. A meager 2% gain coming in there. On the losing side, ICICI Lombard deserves mention, a cut of around 2% on account of that heavy notice that has come in from the tax authorities. So starting with a bit of a red cut, and Tech Mahindra is the other one that I'm watching out for. Let's actually pull up KPIT Tech and see what that's also doing, because they've managed to increase their investment in their German subsidiary, which has been doing quite well for themselves. So mild green is what we are seeing in all of these stocks. But let's also listen into the commentary coming in from Safir Anand as to which are the stocks he's been buying of late and what's his view on the new age tech stocks as well.
I have looked at adding some of the banks. I've been buying Jammu and Kashmir Bank from a price of almost 30 rupees, but I've also added it last at about 75 odd rupees. Recently, I've added Punjab National Bank because I do believe that things are going in the right direction there. There's always the risk of market corrections, and therefore there is a margin of safety, and I do not complete my buying at one particular day. I do have no hesitation in sort of averaging up if I believe that the story is doing well. I have bought, I would call them as a medium risk to medium risk buys, which have a very sort of doubtful past when it came to the way they manage their finances. One is a company called Suzlon, where I've bought the stock at maybe 17 or 18 rupees, very close to the QIP price. And the second one where I'm reading more of the legal developments than the market developments is Coffee Day, because it appears to me, at least optically from the court readings, that there is settlement that is going on. Most of the people on the lending side are sort of withdrawing their complaints, and if the current management is able to walk the talk. No, I've not increased my positions in any of the new tech companies that we have previously spoken about, but I have not decreased the positions either. So there is no selling from my side. I think that the news flow in terms of their focus on profitability and sort of zipping their mouths in terms of extraordinary expansions that sometimes are not shareholder friendly has come to an end, and that is a good sign. And the fact that the managements are now talking more business and less stock market is a very welcome sign. So some of those companies are now showing tractions of cash break even, and even some of them are discussing the possibility of dividends, which makes it much more interesting to wait and watch rather than to exit. No, I'm not added and I'm not sold, and therefore I'm pretty happy with what is happening there. In fact, the management is walking the talk to some extent, and I would rather give it more time.
Okay, let's get you some index calls as well coming in from our panelist. Kunal believes it's a no trade zone. Nooresh has a buy on the index on Nifty. And Kush Bora believe if you should hold on to the position which you made yesterday. Bank Nifty, again, Kush has a hold, Nooresh has a buy, and Kunal would like to see the market for at least half an hour, 45 minutes before initiating any calls on Nifty Bank. Talk to us about TVS Motors. That particular stock, out of all the other two-wheelers, is actually starting to make a move once again. And the view is in the street that as Ola IPO progresses, this company will actually see a move because their EV business is actually 65 to 70% of Ola Electric IPO. So there could be a valuation rub-off. That's the view. And people are kind of building in some long positions out there. What are the good levels where risk reward will be good if I want to play a long trade on TVS?
So, the only concern with this stock is, Ajay, that it doesn't provide that sharp correction for you to enter. Now, if you are a trader looking out for sharper corrective phases, TVS Motors would actually be a stock which would disappoint in that aspect. Now, look at the last 2 weeks of price action where most of the auto stocks, auto index has gone through a correction. TVS Motors has gone through a mild correction, just a 60 point, 70 point correction in the last 10 odd days, and the stock is now almost at the verge of making a fresh lifetime high levels for itself, and that too at a point when most of the auto stocks, the likes of M&M, etc., are the ones which are still reeling under some selling pressure. So that itself tells you the kind of quality the stock has shown in terms of price trends. So over here we'll have to be a bit buy the stocks on very lesser degree of corrections rather than wait for those higher degree of corrections for such kind of names. Maybe 1500 could be a good point where one could look to start buying.
There's some blocks happening. Reliance Industries, there's a block almost 40 crore shares, 40 crore worth, and almost 40 crore on HDFC Bank as well. So there are some blocks clearly happening. Reliance opening higher by almost 15 bucks and 10 bucks for HDFC Bank. But I would like to get a short call, Nooresh, on Crompton or ABB because Avendus has downgraded this space today, calling it expensive. And generally in the last few quarters, if you see, these spaces have done very well. People have already made a lot of money and are in the mood to take some money off the table. Out of the two, ABB versus CG Power, which one looks weaker to you?
So ABB is the one which looks weaker. It's made almost 3 tops around that 4600 mark over the last 3 months. The interim lows are around 4150, 4200, which it is testing for the last 3 sessions. So if it breaks below 4150, it gives a lower target price of 3800, 3900. It's just that the overall sector is in a strong move. Otherwise, it would be a much easier short candidate. So as of now, it's a short on rise with a stop loss above 4400.
Okay, so that's how we are going to start the trading session right now. It seems like 66,400 at the Sensex, and for Nifty as well, there's going to be a gain of almost 19,770 is where we are going to start. The big question is, how long do we sustain above that 19,700 mark? Because a lot of factors at play here, right from the global ones, which are not very pretty, but back home, things have been stabilizing. The festive season has started on a good run. We'll very soon get the auto sales data at the end of the week as well. And then, of course, the MPC meeting, which is lined up in the coming week itself. But for now, all of this is being taken well by the street. 19,760 is where we have opened for the Nifty. The advanced decline ratio, that is what is really impressive, and that's telling you that the rally in the broader market is really continuing for now. So pull up the small cap index. 7th day on the trot, that index has been inching higher. The mid-cap index too should be holding up well in the green. Sectorally speaking, let's watch out for what's doing well, because banks have again had a bit of a tempered start with a gain of around 0.2%. It's real estate pack which is actually building on to gains. Pull up a Brigade, and Oberoi, a Lodha, all of these stocks are doing well for themselves. You also have some of the metal names like Jindal Stainless, which are perking up as we speak. In terms of the newsmakers, let's watch out for what Endurance Tech is doing, because that was going to open up with a bit of a green tick. NBCC was the other one that we were watching out for. And then, of course, Medanta, L&T, MCX, these were some of the other names. Nazara Tech is also in focus on account of that tax notice that they have got. Let's see if the stock is reacting to that or not. On the losing side, ICICI Lombard is the one to watch out for, given the fact that they also have got a heavy notice at their hands. Bandhan Bank, watch out for that one because there was a lot of action on that. KSB Pumps had got some order wins, so that one is reacting positively. And Ujjivan Small Finance Bank, in the last half an hour of the trading session yesterday, that had suddenly spiked 9%, and that momentum really is continuing, Ajay. Another 3% rally coming in for Ujjivan.
In fact, there is a arbitrage there. Ujjivan Small Finance Bank, if you buy directly, you'll get the other one, the other entity actually much more cheaper. So that's the reason why yesterday, last hour of trade, there was some big HNI block which happened. But market is kind of stable, 120 points on the Bank Nifty. Let it settle down for a few minutes, but looking